live. Paul, thank you for joining us. How are you doing over there in New York, you said, right?
Yeah, we're pretty well locked down right now with the COVID. I live in Long Beach, New York. We have, as of this morning, 867 cases.
Oof. Yeah, I've heard
And
New
that's
York is
a
the hardest
relatively
hit.
small island.
Okay, yeah. So hopefully you're staying indoors and staying safe out there.
Correct. I'm getting out in the morning, getting a 5 mile run in with a face mask, pull up
Yeah.
that I want others around me to feel comfortable as well.
I'm with you there. This is definitely a completely new experience for everybody. So we're taking it one day at a time for sure. To get us started though, so why don't you just tell everybody, who you are, where you're from, and how you got started in real estate investing in the first place.
Sure. I went to Citadel, Charleston, South Carolina. I'm originally from Long Island, New York. Went to the Citadel, studied civil engineering, did it for a year, and I wasn't having fun. So I figured I should do something different. And with that, I got to tell you, I'm so glad I had the engineering background, because now when I'm trying to do a deal, I find out what can and can't be done with the property. I can dope out all of that. So real quick, I can dismiss the ones that aren't going to work, are going to be prohibitively costly, or the ones that can be done, and here's how. So the engineering background is priceless. I'm so glad I had it. But in engineering, I really didn't find anybody there that I'd want to go out and have dinner with. So I decided to make a shift, and I had an opportunity to join a small upcoming company called Photomat. In the first year, I had 55 signed lease deals my first year.
Wow.
And 55 deals in the first year. I haven't done more than 35 deals in a year since, but the total GLA was less than 2,000 square feet. Because each of those little guys was 32 square feet.
Wow.
But it was a great training. I was the first person I knew who knew the word demographics. I'm going back to the 1960s. So from there, somebody told me you could actually get paid per deal if you were a broker. That was interesting. So I joined Newmark & Company, which now is an international firm. At that point, we had one office. So I started with Newmark & Company, and then I got recruited away by Cushman & Wakefield. And I spent a decade with them. And with them, I was top retail producer out of the headquarters office in New York. It wasn't that I was that good. They were that bad. And I was continuing to focus on restaurants and retail. That's where my real passion lied. So with that, I then had an opportunity to step out, start my own firm, Great American Brokerage, that I did. We're now in our 41st year.
Wow, congratulations. That's long running.
En route, I was asked to come in. Now with that, there are a number of segments to that. If you want my elevator speech and what I do, I've got 4 basic lines of business. Number 1, I find location for restaurants and retail. Number 2, I buy and sell existing restaurants and chains. So much of that works with investment analysis and whether or not the real estate is involved. I value the business, I value the real estate, and I try to make the best application of available dollars. Third line of business is the concept, design, and development of food service operations. You may have heard of a little thing called Boston Chicken, which became Boston Market. I started working with them when they had 1 unit. I worked with Walk and Roll. Walk and Roll started with them with 1 unit. We went out and developed units as far away as Houston, Minneapolis, South Carolina, North Carolina, New York, New Jersey, Connecticut. So that was a growth as well. We took a core competency and put it into a series of different envelopes. Take something that's core competency, wrap 4 walls around it. So we wound up putting them into everything from regional malls to factory outlet centers to shared spaces in Midtown Manhattan to airports. So all of that was growth strategy for them, and we've taken a number of companies like that. the earlier we get involved with somebody who really wants to grow, the better we can do. Because I've also taken that as far afield as Thailand. I was hired by Majid Al Futtaim for the development of Dubai Festival City.
Wow. Okay.
We did the restaurant merchandising. Now, the restaurant merchandising there was pretty interesting. It was a matter of taking and creating the largest collection of restaurants under one roof anywhere in the world. We put together 62 restaurants, varying in size from 80 square feet up to
80 square feet. Wow, that's small.
42,000 square feet.
Jeez.
Subsequently, I was asked then to consult on Dubai Mall. Now, Dubai Mall is interesting. 4 million square feet, average sales in excess of $1,000 a square foot, and over 120 restaurants in that project. Wow,
that is absurd. 1,000 a square foot. That is
in excess of. It's closer to 1,200 a square foot now.
That is unheard of.
That's terrific stuff. That's very, very productive. No question about it.
Yeah, for sure.
My fourth line of business is, so third is concept design and development of emerging food service operations. And number 4 is where I work with landlords to put food into their projects and a few other odds and ends: business valuation, expert witness work, public speaking. A number of those come into that fourth category. It's a lot of fun if you can help other people grow.
Yep.
And the biggest thing I can do is hopefully tell people what not to do.
That's important to know. It's both important to know what to do and what not to do.
It's also very important. It's also very important to work with people who know what they don't know.
That's true. That is absolutely
because the
true.
ones who think they know everything are not open to different ideas or different perspectives. And after all, I have never seen anybody put a business plan on my desk that didn't show success.
Well, there you go. That's a good track record there for sure.
Well,
I've liked a few things you said so far, especially, you got started, you're an engineer, but you didn't like the people. You didn't want to take anybody to dinner that you were working with. And I've heard this time and time again on this show. One of the reasons most people like, real estate is they like just meeting the people in real estate. They like other investors. Yeah. They like their clients, all those things. So I love that you touched on that. And then you're talking about you had four different lines of business all around one core competency of the restaurant industry, correct?
Correct. I've worked with other retailers as well. I've helped even people that don't have 4 walls around them who just need to market themselves, them services, and help them grow and build their businesses. So the better your business is part of what we do.
Gotcha. Okay. So do you own real estate as well, or do you operate real estate properties individually, or do you do a lot of
I've touched base in all of those areas. Okay. There was a regional mall in New York City. As a matter of fact, it was the first enclosed regional mall in New York City. And in a way, it was poorly planned. It was in Staten Island. And at that point, I was with Cushman & Wakefield, and we were asked to take over the management of the Staten Island Mall from the Chase Manhattan Real Estate Investment Trust. That was the first go-around with Real Estate Investment Trust back around 73, 74, 75. So in there, one of the things that was interesting, well, Cushman & Wakefield certainly had a background in building management. They didn't understand percentage rents and how they work. So explain to them kind of how that is, how it's calculated, how we go about building it, and how we help the tenants improve their sales so that we get more in percentage rent.
Gotcha. Okay. So, so it sounds like you do a lot of things in your business, in the Great American Brokerage. All of them, all the different lines of business, you have to get a lead in from somewhere. You have to have at least one point of contact or initial point of contact to make them a client. So how is it you go about lead generation? How is it you go about getting new leads? I'm sure, you've been in this for 30 plus years. A lot of it has to do with, repeat customers,
Sure.
and word of mouth. But so what are the main ways that you generate new leads in your business?
Okay. Networking. Hey, that's an overused term. What does networking really mean? How do we go about doing that? I am involved, for instance, I go to where the customers are. If I'm going to do a lot of work with restaurants, then I'm going to be involved in the restaurant industry, so that I don't read Women's Wear Daily. I read Nation's Restaurant News, Restaurant Business, and Deep Dive. With those, I'm going to learn more about the business. It's Stephen Dubner's 10,000 hours to become an expert. Well, by the time you hit 30,000 hours, you pretty much got that stuff cold, and you have both success stories and failure stories that you've garnered from others. So I would say where it works best for me, somebody says, hey, I've got a restaurateur with a problem. He doesn't know how to play it. Does he own the real estate? Does he own the business? How do we make the business work? My job is to maximize the value of their assets. How do we go about doing that? So in doing that, there are a number of pieces that we need to look at. And what I try to do is figure out if there's a real estate play, is there a business play? For instance, here's a real simple analogy. If I go out and I buy a restaurant business, or I invest $1 million in a restaurant business, what sort of rate of return am I going to get? Well, if I spend $1 million in build out, hopefully I'm doing $1.5 million to $2 million in sales. If I'm doing that, ideally, if I have a 10% bottom line, I can have $200,000 a year cash flow out of this $1 million investment. Therefore, my ROIC, return on invested cash, is going to be 20%. However, if I have a 10-year lease, I get in 20, 20, 20, 20, 20, and come year 11, the end of a 10-year lease, what's my equity? Zero. Yep. My lease is up. I'm not there. So it's good that I was able to scrape more chips off the table early on. Now, if I go out and buy a regional mall, I'm going to take you through 3 scenarios. Number 1 is an operating business, hopefully hit 20% ROIC. Number 2, if I go out and buy a regional mall, why are regional malls selling at 3% rate of return? Because what you get isn't just the rate of return annually, it's what you're going to get long term. So if I buy a regional mall at 3%, and my average length of tenancy in a regional mall is 7 years, I have an opportunity to reprice my property every year that tenants roll over, and I can get a little more, get a little more, get a little more. So 10 years from now, I have a measurable appreciation. So if I have a 10% appreciation plus a 3% annual return, my total return on invested capital over the 10-year hold period is going to be significantly better than just the 3% cash flow. If I go out and buy real estate, I'm going to have a lower return. If I take $1 million and buy a freestanding building that I turn into a restaurant, hopefully I'm going to have about a 10% return, but I am no longer limited to just what I get during the first 10 years. At the end of 10 years, I still have equity. And hopefully I've been paying down my mortgage a bit, so now I am not nearly as heavily leveraged. So to summarize the choices, if I have somebody who owns a business and a real estate, he has a cash flow. Some goes to his left pocket, some goes to his right pocket. You are very foolish to have both of those in the same entity. Why? Hey, somebody goes out, has too many drinks, runs down somebody, gets sued 1, 3, 5 years from now. You can lose the business. You don't want to lose the real estate. You don't want to put all your chips and go all in on every single deal.
That is good advice. Different LLCs for both the real estate and the business. Okay.
Right. So you separate the two. Now, if I have $1 out of cash flow from that business and I put it on the bottom line, the net operating income of the restaurant, how much can I sell it for? If I'm fortunate enough to be bulletproof and moving forward, and this is not going to happen in the market we're looking at now. If somebody will take it at a 20%, well, they want to make something on top of just that 20%. So chances are I can take that dollar and sell it for about a 3 multiple. So if I've got 100,000 net income, I can buy the business for $300,000. Generally not all cash. Typically these will carry 50% down and 50% seller financing. So if a buyer, a prospect is buying a restaurant business with 100,000 cash flow, $1 million in sales, 100,000 net operating income after all salaries, it's worth 300,000. I buy it for 150 down and the rest notes out of the business. Well, I have to pay those notes, which may be 20% of my cash flow, reducing me to 80,000 in cash flow. But I now have a strong return, which is going to come back to me many times over during the remaining term of that lease. If I take that same dollar and put it over into the rent category, I can sell that dollar for 10 or 11 or $12 because that's a real estate investment. So what I often do is say, okay, Mr. Landlord, you got this restaurant that operates and does $1 million a year with 100,000 cash flow, and you're paying yourself 100,000 in rent during that period. This is what I want you to do. Let's sell the business for 200,000, but charge 10,000 a month, 120,000 a year on the cash flow. You now sell the business for less than it appears to be worth, but you are going to increase your return, that extra dollar that you're going to get year after year after year after year on the real estate.
Interesting. I've never heard it put that way. That is so that would require you owning the business that is in the real estate that you purchased.
That's for the people that own both.
Yep. Okay.
Let me give you another scenario. I had somebody, an ex-football player, got involved in a place that was a neighborhood tavern, let's call it. I mean, It was decent. It was maybe 4,000 square feet, but burgers and beers were 50% of their sales. Okay. He invested $1.2 million and operated it poorly. He then comes along. Now, fortunately, he had a very favorable lease. Sales were $1.2 million, but his lease was only $40,000 a year.
Not bad, not bad.
I was able to sell his restaurant for what didn't appear to be much, $200,000 on a business that was doing $1.2 million. That appears to be low. But I then had the tenant pay $150,000 a year in income, meaning he netted $110,000. He has $150 coming from the subtenant. He turns around and pays the overlandlord $40,000. He nets $110,000.
Oh, okay. So it's kind of like subletting your like a single family home that you rent or that you own, subletting it out. So if you were renting an apartment building, subletting it out and basically subletting it for more than you're getting the rent for.
Correct.
Gotcha. Okay.
That way, so if he nets $110,000 a year, then over 10 years, he'll get $1.1 million back on his $1.2 million investment. Plus the $200,000 I had up front. Guess what? He's ahead of the game.
I like it. I like it.
Let's take it an even step further. I now take the sublease and I mark that up at a 3% annual increase. The underlying also is a 3% per year. But what happens is 3% of 40,000 is a lot less than 3% of 110,000. So the gap between the two, meaning the net to the sublessor, becomes greater year after year after year. So by the time you get finished, he wound up actually netting $1.6 million on his 1.2 investment.
That is a level of strategy when it comes to real estate that I am not there yet, but I loved hearing about it. That's
well, now you are.
Now I am. I just got to implement it. That's great. So you just gave everybody a lot to think about. Yeah, I'm just going to leave it at that. So when it comes to commercial real estate, I'm going to move us on to one other topic here. If someone were interested in getting involved in investing in commercial real estate, purchasing, whatever it may be, what piece of advice would you give that person just starting out who hasn't done commercial real estate yet?
Get a partner who is experienced in the area. There are real estate investing clubs everywhere. Now, just because people like to have the pride of ownership, be able to drive down the street and go, that's my investment. For a novice investor, they are certainly better off starting with local partners, getting into a real estate investment club, and with that, they are ready to move with someone else, borrow their experience, benefit from that, provide capital, and enjoy return on capital that works not only with the judgment through your eyes, but the judgment of somebody who's been around the block previously.
I like it. That's very sage advice for sure. And when you're dealing with commercial real estate, I mean, I've only done single family, multifamily, and now mobile home parks. So mostly, where people live and sleep. I've never dealt with businesses with real commercial real estate. So when you're dealing with purchasing commercial real estate, what I'm assuming do you also have experience with residential real estate?
Fortunately, no.
Okay.
Here's the joy.
I'll ask the question either way.
Let me suggest it this way. When you are dealing in commercial real estate, people understand it's a business. They understand business obligations. I don't have the time, effort, or energy to try to educate every residential user his full obligations. Hey, I don't like the color of the wallpaper. Or I saw a cockroach in my place, so I'm not paying rent this month. Or there was a leak in the faucet in the bathroom, and these are the kind of things that would drive me crazy. Yeah. I want to deal with people who are professionals. They understand there's an obligation to pay rent.
That makes absolute sense. I mean, personally, me, I've been very interested in commercial real estate for a while now. I'm definitely not going to pull the trigger yet because I don't have the experience. I don't have the knowledge, especially with like somebody like you. But it's something that has been it has interested me precisely for that reason, because you're dealing with people who are business owners. They understand this is a business, and you are part of their business model. They're renting a property from you, and so I like that as well. Switching gears just a little bit here. We all know real estate is, it's cyclical, both economically and emotionally. There's times when you feel like you're in the valley, when you don't know what the next step is. And there's times when you're on the top, you're in the mountain and you're feeling great. Kind of take us to what is the hardest thing that you've experienced so far, and what's the lesson that you've learned? I mean, you've had, 30 plus years of experience here. I'm sure you got plenty of stories. So what's the hardest thing you've experienced? And then also, what's the peak? What's the thing that you absolutely love about real estate? Give us some of those stories.
The hardest thing goes over to a residential project.
Of course.
In Manhattan. And in the courts in Manhattan, in landlord-tenant court, here are the rules. You're the landlord, you lose. Any questions? Simple as that. Tenants move into a space. Now, some of these became expensive lessons for me and my partners. Someone moves into a space. It is a loft space. You sign a lease. Oh, I'm in photography. I need to place my studio and everything else. Okay, but this is zoned as a loft space. You are not permitted to reside in this space. You cannot live here. You will not live here. Sign here. Okay, they sign there. They move in. Are you ready for this? They install a stove. The stove breaks down. Guess who has to replace it?
Of course, the landlord.
The landlord. But wait a minute. It is not properly zoned. Oh, that's right. It's not properly zoned for residential. Therefore, I don't have to pay you rent.
Oh, interesting.
Spend the next 2.5 years in court, where the court, I said, look, pay the money into the court and then later figure out who gets it. No, there's no reason to. You spend 2.5 months in court, you got 14 units, and every one winds up owing $40,000 in rent over the 30 months you've been there.
Oh, that's a big one.
If you're the tenant, I hesitate to call it a tenant. Let's call them a squatter, because they're not allowed to live there. They signed an agreement that they wouldn't live there. Let's call them a squatter. They have a choice now. Either they pay $40,000 in back rent or move out. How many of them do you think pay $40,000? You got it.
Zero.
See, you can do very well in residential real estate. That's my experience with residential real estate, which is not a lot of fun.
Makes sense. So you kind of got your shirt taken there in residential. So what was the lesson? I guess the lesson was you don't deal in residential. Is that what you took from that one?
That's one. The other is that the cards are definitely stacked against you in the city of New York in residential.
Yeah. So know your local real estate laws.
Know the rules. Tell me the rules. I can play the game. Yep.
I agree with that one as well. I've kind of I've run into that myself sometimes. Not as bad as New York here in Seattle, but we're getting that way. So we'll see how it goes.
Well, here's something that's interesting. Let's look at the difference between residential and commercial. In residential, in a way, it's supply and demand. How much can I get for this apartment, right? It's going to be pretty much supply and demand within any given market. If I want to be in South Dakota with an oil drilling boom, rates are going to go sky high. If I'm in Silicon Valley, where everybody wants to be there to become their next cyber millionaire, that's going to drive up prices. So it's pretty much supply and demand. If I go to retail real estate, the value of retail real estate is very simply the ability to do business at that location. If I can do $2 million in sales rather than $1 million in sales, I can pay substantially more in rent. But upstairs, the attorney that's sitting there in 2,000 square feet, doesn't matter if he billed $1 million, $3 million, or $5 million last year, that does not affect the value of the real estate. It is simply a matter of market supply and demand. So before you get into a project, look at what the demand is. Look at something that you can come to market at a price lower than replacement cost, lower than somebody coming across the street and building a new shopping center. I'm in here, I can get a better cash flow. Because I can have a better cash flow, I can afford to pay a little more for this than the guy who's got to start from scratch. I have a fellow right now that I had worked with, a client I had worked with. This was going to be about a $600 million project. And the $600 million project was going to be a collection of retail, office, and principally residential, luxury residential apartments. He had all permits ready to go. He had gotten over the community objections, gotten over everything else. He's ready to go. Well, along comes somebody with an Article 78 saying, you have to prove to us that this will not harm our environment, will not harm our community, will not cost any of the minority people jobs. And he has now been held up. He is in a position where he's ready to go, shovel ready, permits in hand, and then gets held up for another 18 months. And the people who bring in articles like that, there's no penalty. In other words, if it's baseless, doesn't matter, still has to work its way through its courts. I know somebody that got into in the city of New York, and the judge says, maybe you want to go to arbitration. The arbitrator came in and his first pronouncement was, we're in the city of New York. There are X number of judges. Every judge has a workload of 1,200 cases.
Whew.
Want to wait until this comes up? Or do you want to sit down and negotiate? Negotiated. Thank you very much.
Yeah, that would be whenever stuff like that comes up, you definitely do not want to go to court in any situation. At least that's my opinion. Court is.
I never want to go to court, period. I want to work things out, unless the other guy's just totally off base. But basically, what you want to do is to make sure that let's be something that both parties can live with. And just because courts are so expensive, it's time, effort, energy, and it's a matter of how much each party loses. There's no win-win.
Yep.
There's no win-win. Look at the 3,000 cases of people who have sued Trump personally. How many of them collected? How many of them are still in court? It's the court system is not as efficient as it should be. If the loser had to pay court costs, we'd see a fraction of the number of cases that are out there. I'm always in favor of negotiating a settled agreement. And where we are right now, we're in a situation. I spoke to one fella who is the president of a company that's a real estate investment trust. And I was speaking on behalf of one of my clients who has 3 food operations within his enclosed regional mall. He's 1% of the tenancy and less than 1% of the GLA, gross leasable area. In his case, he has a very hefty situation where he has 300 individual tenants. The courts have a phrase called use and occupancy, meaning you got to pay your rent. But wait, I didn't have use, and that was judged by the government. So do I have to pay? If you're a bank, the bank is still doing business online. If I'm the restaurant, if I'm a car dealer and I want to sell cars and somebody doesn't buy it this month because it's closed down, they'll come back next month and buy the car. There's no way I can sell the dinner you didn't have last Saturday night. There is no shelf life to demand.
I've already gone to QFC and got myself a frozen pizza.
That'll work. That'll work. So you can see that the cases are different category by category, but it would be a lot simpler. I said, Joe, you got to go back to your lender. Speak to your lender about forbearance. Speak to them about waiting for the principal and maybe interest accrues, but wait for the principal. Some of your people can still afford to pay rent. It would make more sense for you to do that than try to have 300 individual negotiations with each of the tenants in the mall.
That makes absolute sense. So I'm gonna move us along here because we are stuck at 20 to 30 minutes for each episode. So I want to ask real quick. First, what is your favorite project that you've done? Just give us a real brief summary and why that was so special to you. And then if you could give yourself, starting out so many years ago, however many years that was, just one piece of advice, what would that one piece of advice be?
Okay, 2 good questions. I would say my most favorite project was Dubai Festival City, because how do you put together 62 restaurants that don't step on each other's toes or fight for the same, or as our Chinese friends would say, eat out of my rice bowl? What I was able to do is come up with different things. And also, one of the most fascinating things about that was the homework I got to do. And that meant getting into a Range Rover and driving to Abu Dhabi and Sharjah and Ajman and Al Qutain and Elan, and seeing in each one the oldest retail, so I understand their framework, their basis, their understanding, and their heritage. And on the other end, looking at the most recent retail, so I can kind of see where it's going. At the time I did that project, they weren't quite ready for sushi yet, but there were a lot of things they could embrace. Next, you get to the point of where do you serve alcohol, where do you not serve alcohol in a Muslim country?
Ooh, yeah, that's a good point.
Sheikh Rashid Al Maktoum, who was the father of the present ruler, he was the Benjamin Franklin of his time. He saw what the assets were in Dubai. Mm-hmm. Number one, we're in the middle of the English-speaking world. We're halfway between Australia and England. Number two, most airports will shut down between 11 p.m. and 6 a.m. He said this would be an ideal time for us to open. When I fly into Dubai and get there 9 and 10 o'clock at night, they go, oh, thank heavens you got here before it got busy. Because it gets busy in the overnight with the connections that connects the world. They have Terminal 3 there is the largest building in the world. It's larger than the Mall of America. It's larger than
I
the
didn't know
Pentagon.
that.
It's the largest building in the world. One of the things they have there is you don't walk into the duty-free store. The common areas are the duty-free store. So as you're going from one airplane to another gate, you are passing through merchandise. It is the highest grossing store in the world. This retail sales of that are over $1 billion in one store.
That's absurd.
They can make up their own rules as they go along. They created Dubai Financial City. In the financial city, how would you, as a banker, like to operate under Sharia law? Crazy. I don't want to do that. So what you do instead is in that area, British law governs. Every international bank in the world has a branch in London. Same rules. I don't have to learn any rules, just come here. Next comes alcohol. The sheikh said, you know what, if people come, tourists drink more on vacation than they do when they're at home. So you got to have alcohol if I'm going to build tourism. We only have 10% of the oil of Abu Dhabi. So we got to build something else. And we have beautiful beaches and we speak English and we got a great airport. So what else do we need to do? We're going to get tourism. We got to have alcohol. Well, if it's alcohol, that would be in the hotels. So it's okay for a hotel to have alcohol. In Dubai Festival City, we put in a hotel and called the whole thing a hotel so you could sell alcohol anywhere. However, you don't want to offend the Muslims. So on the street level, there's no alcohol. You can't see it. It's interesting when you see the first TGI Fridays over there, which had the traditional on the side, had a greenhouse section, but you can't see in because there might be alcohol on the table, so you can't look in there, so you can't do it.
Interesting.
Now, if I go to what was at one point the largest hotel in the world, was the Hilton Hotel in Las Vegas. 3,500 rooms. They had 9 restaurants. Now I go to the Marriott in Dubai, 350 rooms, 1/10 the size. So how many restaurants do they have? 11.
Wow. A lot of food.
Because they serve alcohol. Now, the rule is you don't serve anyone in national dress, in the dashta and the headgear. But if they put on their Western garb and walk in, they'll serve them.
Come on in. We'll get you a beer.
So that was the most fascinating, learning, tell me the rules, I can play the game. And learning the rules and seeing what it is and helping them grow and doing something to put together 62 restaurants that don't conflict. Now I've got a magnet that will bring plenty of people to the area because there are so many offerings and excitement.
I love it. That would be quite the experience as far as dealing with international cultures and just creating something that is as large as 62 different restaurants for sure. So
to answer your last question, which was what advice would I give? Number one, it's a long game. Number two, I have had a number of projects where creativity and insight served very well. For instance, I bought an interesting multi-use building in Freeport, New York. It was ground floor retail, second floor was residential. And in that place, I figured we got to do some things here to make this better. How do I take the quantum leap? And I came up, number one, the village had created this as a pedestrian area with bricks and nice old-fashioned lampposts. But the problem was that prohibited the cars from seeing the storefronts. So I convinced the village to tear that up. It had worked very well in Ithaca, New York, which was a 150-year-old downtown with brick walks and the like, but you weren't competing with highway retail. You didn't have power centers. You didn't have other things that you did have on Long Island. So I convinced them to tear that up. The other thing is I went to a local stonemason and came up with some renderings of what the front of it could look like. And therefore, I said, look, they're going to tear up the street here. You're going to significantly increase Boom, here is what you can do with the storefront. I sold it on that promise. I had created the quantum leap within 1 year, and I sold it for twice what I paid for it.
Oh, wow.
There was another project I was involved in on an equity basis on the Lower East Side of Manhattan. Now, at the time, Lower East Side of Manhattan was a drug den. Mayor Koch came in, Operation Pressure Point. And on every other corner, there's a cop. So that if I have a square block and on diagonal opposite corners of the block, I put a cop. Now, each one can look in 4 directions. Each one can look in 4 directions so that no gatherings could take place without views. Number 2, the building that we had was built by someone with some foresight. The Lower East Side of Manhattan, you've seen it in the movies with Leo Gorcey and the Bowery Boys and the like, they were all tenements. The guy who had this building had some foresight. He built 10 to 11 foot ceiling heights and 18-inch concrete slabs, so that by the time you got to the 6th floor, that was over the other buildings, because they were shorter floors. They were 8 foot. These are 10 foot. Added up, boom, I got an extra floor. When I showed that, and I was showing it during the late fall, I would always show it starting at 4:30 in the afternoon. Because if I start on the ground floor and then work my way up, by the time I got to the top floor, it was dusk.
Sundown.
And you could see the Empire State Building, the Chrysler Building, the New York Life Building, all illuminated. And it was a view to die for.
That's pretty cool. I love it.
drew up plans on how to take each floor and make it 2 tenancies rather than 1, and sold it for twice what we paid for it.
That's great. So you got creativity and keeping in mind that it's a long game.
Absolutely. And what the local government can do. Local government can remove the street, which was an impediment. The local government got drugs out of the area, and now it's a hot place for restaurants and nightclubs.
All right, I like it. And making sure you are on the same side as the government, as the local government. That's good.
They're the first ones that can hurt you. I remember Norman Brinker International, Chili's, Romano's Macaroni Grill, a bunch of those. He had said to me years ago, Paul, your competition isn't the guy down the street. It's the government. And they're the ones that can kill you.
And that is absolutely true. I've dealt with permitting myself, and the government. You got to get them on your side. You gotta be friends with them, or else they're going to be your worst nightmare for sure.
Amen.
All right, Paul. Well, thank you very much. We're at the end of our time here. Before you leave, though, before we stop recording this, go ahead and tell people, if they want to get in contact with you, what's the best way to reach out to you?
Okay, simple. Our homepage is restaurantexpert.com. That is one front door, and with that front door, that finds people who want to buy restaurants. But I also have an interesting article up there, which now has been picked up by 3 different magazines and newsletters, which is how to deal with your landlord in an age of COVID-19. And there's a key on top there. Homepage, Restaurant Expert, email paul@restaurantexpert.com.
Perfect. All right. Well, again, Paul, thank you very much for sharing your wisdom here. I learned a lot. I'm sure everybody watching and listening learned a lot as well. If you guys are watching and listening, you want to get in contact with Paul, reach out to him at his website, restaurantexpert.com, or reach out to him with the email that he just listed. And thanks for joining, and we'll see you guys on the next episode.
Thank you so much, Gabriel.